Yo, check, check, check. Hopefully, audio is good. I have a little, what's this called? Restream has like redone their settings. So, update. Let me see. Oh, yeah, we're in the chat. Yep, we're here. Spiders in the house. Ready to roll. All right, guys. Audio check. Hopefully, we're good. Should be good. But man, are we done? Are we done pumping? A little bit of a pullback. Looks like she wants to bounce again. It's been a wild one. Ready to roll. Live on edge, live on edge with the avocados. All right, guys, I'm gonna go ahead and kick it off. I know we got a couple guys trading still. Just checking out the landscape. Let's do it. So welcome. By the way, if you're new, this is what we do every single Monday, just about 12 p.m. Eastern at the lunch hour. And we are loud and clear. The whole crew is in the house. I trade for a living. So basically every Monday, what we do here is we kind of go over what was important last week. What do we need to watch out for this coming week? And let me tell you guys, this is going to be a big, it's a big week. So before we get into it, at the very end, I will be able to take some like chart requests if you want. So go ahead and drop those in the chat. Good afternoon. And yeah, let's hit this. So this week, if you didn't know, we are going to have something called the Jackson Hole Symposium. And if you're not familiar with this, this is definitely a big event. So it's a big event in terms of price action. It's a big event in terms of what Powell is basically going to lay out is essentially what the plans are moving forward. I think it was last year where we just it was like a rocket ship type of situation. We've run quite a bit from this last. You say every week is a big week. Not every week's a big week, but this week is an important week, right? From here, what I'll say is we want to take a look at a couple things. Powell's going to lay out the plan. I think the markets are kind of just anticipating this rate cut. I think that's pretty obvious. And we're just a little toppy. We've come way off the lows from that last 2 Mondays ago when we had the Volmageddon. It was a big deal. And I feel like we're almost back to all-time highs. I mean, we're within a single weekly range. Let me just check this. Yeah, we are very close. One more time. So it's a little, 1.5% off the highs. We were 10% off the highs. Now we're 1.5% off the highs. I mean, what a rebound. What a freaking rebound. And we'll go through this, but I'll tell you what, since not this last Thursday, but the Thursday before, when we had that jobs data and I was looking at, I was like, I have never seen the market react like this to a jobless claims report. We'll go ahead and go through that and why this market's kind of running the way it's running right now, and really what should we do from here, because I think that's the most important. So just a couple pieces. Last week, here's the data. The data points from an economic perspective are on the top in the bullet. So PPI came in pretty much in line. So in consensus numbers, that's parentheses are the consensus numbers. So essentially what was priced into the market at that exact time, priced in 0.2%. We actually came in at 0.1% versus 0.2% prior. That leaves the year over year at 2.2, actually pretty decent. And then the CPI. So PPI is producer price index. I believe we got that first. And then we get CPI. And this was pretty much flat, like literally exactly at consensus. So the core month over month 0.2 on consensus of 0.2 versus 0.1 prior. Month over month. So the bottom one is headline. Shouldn't say. Oh yeah, CPI. So core means not including food and shelter, and CPI headline is that's inflation. So it would probably show up on your calendar as just an inflation number. So the real top line inflation coming in at 0.2% versus a negative 0.1% prior, leaving the year over year at 2.9. So remember, guys, the Fed is really looking for this Goldilocks situation, and what Goldilocks is. Historically, Goldilocks is 2% inflation and 2% GDP. So everything that the market's looking at, it's looking at both the GDP, or basically the growth rate of the economy, and the economy, let's call it, and inflation at 2%. So we're coming down pretty heavily for now. We're sitting at 2.9. I'll tell you what, the next 2 monthly readings that we're going to get from a CPI perspective, we're going to drop off like 0.5% increases. So if we get anywhere close to this, let's say we're at 2.2% CPI month over month for the headline, that's going to leave us really at about 2.3 for headline CPI in about 2 months' time. And then from there, it's basically going to be really close to that 2%, that Goldilocks level. So whatever happens from here, to me, I'm kind of like, well, in, let's say, 3 months' time, give or take, we're probably going to be talking about a Goldilocks economic situation. The market's not talking about this. This is just me. But that leaves us in a pretty good spot. I've never been in the recession camp. But here's what happened. So 2 weeks ago, it was the jobless claims that started really moving the market. And you can see that. I'll pull over this chart really quick. So 2 weeks ago, Thursday, it was this day, Thursday, and I'll drill down just a little bit. This was Wednesday, and Thursday, right here where this line is, that's where the market actually got that jobless claims data. Sorry for all these lines. But literally right here on this candle. And what that was, essentially, we got like a 200, and let me pull this over. From a jobless claims perspective, last week, what would be this month? The first. So initial claims, this was the 1st of August. We have 249. I'll open this up and we'll just see. So 249. And if you're up here in the 250s, that's not really good. But then 2 weeks ago, we get this $234,000 or 1,000 net new jobless claims. That's not indicative of a recession when this is coming down. And then last week, we got 227,000. So that kind of put us in this really crazy situation where like this whole like recession rhetoric, and this is why that jobless claims number really just pivoted the market. And it was literally on that day, again, this moment right here. And every little dip since that Thursday, here's where we got the jobless claims number. Let me take off some of these NFP levels so it's not in your way. You know, the intraday moves, this was just like, boom, we're off and running. Every little dip has been bought since then. And then Thursday, here's last Thursday, we have another gap up. What happened again last Thursday? Guess what? Another jobless claims number hit the tape right here. So literally right here, one more time, we get another jobless claims number. It's actually lower. And it was like a double down, right? Double down on, where is this? Thursday. Jobless claims. So consensus, 235K coming in. Lighter again. Plus, we got retail sales hitting the tape here, 1% versus a consensus of 0.3%. These are just numbers that you don't see in a recession. So this whole, I think, the yen carry trade, maybe that gas on the fire, essentially, with the underlying fears of possible recession, and then, global tensions, like amidst also. Like, you don't get these numbers, though. You just don't get those kind of jobless claim numbers, and you don't get those kind of retail sales numbers if we're in a recession right now. And so, that price action twice, back to back, it makes sense, right? It makes sense that we're all the way back here from this point. That said, look at you guys. It's all going. They're going. From here, though, we just don't, there's one thing that could really change this, right? And it's possible that we get something like that on Wednesday. It's really weird. So, and we'll talk about it a little bit today. I was hoping to get our buddy Kevin on here, but he's got to go get approval before he's allowed to show up on the show. But the one thing that would really change this is if the BLS or Bureau of Labor Statistics or Yeah. If they come out and they say, oh, you know what, guys, these were all wrong, right? Because the market is moving off of this data. It's moving off the jobless claims data. It's really weird. And if they say, hey, look, we're wrong, okay, well, that would pull pretty much all of this back. But until then, that's essentially the only real catalyst that I see. Even Jackson Hole and this whole idea about how many rate cuts are built into the market. Yes, that's important, but just know right now, the market is moving off the jobless claims number and off the idea that there is no recession. And I don't think that they're necessarily wrong. What we will get this week, and we'll talk about it in a little bit, is we're going to get a moment where the BLS, who has been absolutely horrendous at estimating, and all their reports have just been revised away. We're going to get a big revision on Wednesday. So Wednesday is not on the economic calendar. I'll just tell you that right now, but there will be a revision coming out to the BLS labor statistics, and they're going to revise down a whole lot. I think the estimates were like 1 million. And it's more like, and I talked to Kevin earlier, I was trying to figure this out because it's a big, I think it could be a big deal from a market reaction perspective. Whether or not it's a big deal in reality, I don't know. What I've been saying on this channel, if you guys have been listening, my entire thesis since the beginning has been that, you know what, the recession already happened, right? It happened back in October. And when we saw those two back-to-back negative GDP prints, October of last year, that was the recession. And essentially what I believe is about to happen is that the BLS is just revising back all of the jobs that they said that we were creating. Well, we weren't, and we've been in recession this entire time. But guess what? Right now, we're probably coming out of it. So that quote unquote recession might be backdated pretty heavily. And that's going to be an interesting one to watch. So which is why I'm saying it might be a big reaction day, but whether or not that changes, let's say my personal thesis moving forward, it doesn't. It if anything, is probably going to confirm it. So that said, that's what's going on. The market did not really move on CPI, didn't move on PPI. It moved on retail sales, and it's moving on jobless claims. And last week's data was basically a double down on no recession, right? So are you surprised? So should you be surprised to see what we're seeing right now from a price action perspective? No, you really shouldn't. So that said, that this lands us pretty much, 1.5% off of the highs heading into a pretty big event. It's kind of like a show me moment. I'm not sure this week I really want to press a whole lot of bets ahead of this event. My biggest concern is that this ends up being like a sell the news thing. So I think we'll see from that perspective. On the other front, oh, by the way, this was all Thursday. Also Thursday, we got Walmart. So Walmart, again, if there's this recession, Walmart's not going to raise guidance. Right. And that's exactly what Walmart did. So we got a beat and raise from Walmart, like a pretty good one. Market loved that reaction, or market reaction was really good off that number. We will get Target later on. It might be even this week. What I'll say about this is that the Walmart beat was really about them being able to leverage the grocery business, right? And use that foot traffic to increase other sales. So their other sales in terms of soft goods, things like that, wasn't clothes, et cetera, wasn't like outstanding. It was really like the grocery part of their business. Target doesn't really have that. So it's going to be a decision of, can they leverage their grocery traffic to convert to other sales, and are they doing well in their grocery business? For the the other stuff, look, the bets on these emergency rate cuts, 50 basis point cuts, September, that's actually gone now. So we're really right in line to probably where we're priced appropriately, which to me as a trader, I'm like, okay, well, if we're valued or priced appropriately, how much upside is there? And does it hold? And I think that's really kind of where it stands, right? Frankie, sell the news. I'm going to sell it, sell into it. Yeah, so like that, this sets up this Jackson Hole situation as a possible sell the news event. But we'll look into this calendar for this week. It's going to be a chop fest, man. I'll just tell you that. I'm looking at what we have on deck. This is a choppy setup, no question. So we'll see. There are other news, DOJ, antitrust lawsuits against Alphabet holding the stock down for sure. There was another thing about, and this is about like 20 something billion dollars that Google pays Apple to be the default search engine on your iPhone. Look, Google makes a ton of money off of that. And I believe as an Apple bull, right? I believe that is about like that's a good chunk of Apple's gross profits on their services side. It might be near like 50%. So if that happens, that's going to be a major headwind. I think mostly for Google. First of all, it's not going to happen anytime soon. We're talking years out for that to actually go down. And I think the market understands that. It's going to be about, hey, in the meantime, can Apple spin up their own search engine and get traction there? Can they make more money by doing it themselves? And by the time this goes through, if it goes through, will they have their own solution up and ready? I believe they already launched like a beta version of it. Eric Schmidt. I don't think Google would be broken up either, right? Eric Schmidt, by the way, this is the old Google CEO. That dude's did you see his interview? And this is why I'm not a big Google person. Even Eric Schmidt kind of took a jab at Google saying, hey, look, the reason that startups are doing so well is because they work their asses off, and Google's decided to make work-life balance a higher priority. For what it's worth, right? He said that, and then he starts walking it back last week. That was crazy. But again, confirmation, like I'm not a Google investor, mostly because, fool me once, shame on me, fool me twice. And this is in terms of the AI launches. Even this most recent one it's a cool feature, but the demo, exactly. That's exactly what he said. And he spent like the whole week walking this comment back. It was crazy. So even this last, AI demo of like, I think it was, they took a picture of a calendar, like a written calendar, sent it to their Google thing and said, hey, what's a good time that I can meet with this person? It was like 4 tries in finally. So Live on Edge said, you say recession happened with GDP week, but a few indicators to identify if we had recession didn't play out, like unemployment, wage decrease. Yeah. So what's happening, right, is that I think GDP, it was -2. We did have 2 negative quarters of GDP in a row, but that was like revised so that it won't show, right? It was negative and then they revised it. And the unemployment, wages, and things like that, that's all getting like revised right now. And the BLS has just to me, I'm thinking revised to say that, look, we had already been in it. We're out of the depths of it and we're coming out right now. What are we talking about? I hope they spin up Mark. Yeah, no, I mean, that's the thing. Like Google, definitely the sum of the parts is absolutely greater than the whole to me. The YouTube piece, it's a little funky because, YouTube ads, the ad revenue that YouTube gets should be really good. And I think that Wall Street wants the YouTube ad revenue to be better. We're on YouTube now, and I've been working with some streamers, and it's like, on YouTube, like how fast, how long do you let an actual ad play before you hit that skip button? Like the ad pops up and you're instantly hovering over that skip button. That's not like regular TV or like even TikTok or anything like that. It's a little bit different. So there's not a lot of big advertisers and on YouTube, and I just don't think that the ad revenue is quite the same because of that. I think that's going to be a bit of a struggle unless the YouTube Shorts really take off, which maybe that will. Who knows? Or for ads. So a lot of guys were watching oil this morning. Oil's had a big day. It was actually oil looking down right now, pretty much all back. Yep, oil back. I think this came out. There's possible counterattacks on Israel. I think oil was up for a little bit and pulling back. Yeah, oil looked like it was bouncing. I think this is just gonna, you know what, crude coming back into this level, it's probably a buy. If we have any conflicts spin up over here, I would probably be long crude. I mean, every time it gets into this area, this low 70s, it ends up being a buy. So I actually like that for upside, even though the chart looks really ugly right now. We can look at some of this as a potential. Like, this is not going to be hitting the news, a lot of that stuff. But whenever it gets into this area, crude ends up being a buy. So we can look at some charts around that for sure. Yeah, and I think that's mostly it. This housing affordability index, I mean, this thing has been going crazy for the last few days, or for a few months, really. And now, again, lowest affordability index since the 1980s. This is crazy. So this week, this is what we have. Today's kind of a nothing burger. Tomorrow, we kick off a lot of this Fed talk, Fed speak with two speeches. And then Wednesday, here's the thing. So Wednesday, we actually get FOMC minutes from the last, and this is where it starts to get really, I think, really choppy. Jackson Hole is like a 2 or 3 day event. I believe it starts on Wednesday, maybe it's Thursday, but the keynote speech from Powell is not until Friday. So in between all of that, we get a lot of chop and a lot of, talking heads saying all kinds of stuff. But the two data points we're going to get, one, FOMC minutes from the last Fed meeting. And then we do get this kind of like, I'm going to pull up this tweet, and it was from Zero Hedge, I believe. Yeah. Oops. Let me grab this. I'm going to see if I can grab the tweet, wherever it is. I think I bookmarked it. Yeah. So here's this tweet. And it's kind of funky, right? So this is Wednesday, and I did confirm it is going to be Wednesday for sure. We'll downward revise jobs from April 2023 to March 24 by up to 1 million. All the beats recorded in the past year will have been misses. This is wild, right? And the U.S. job market is far worse shape than it would like to admit. But I think, it was. And then, but those last two labor readings, like the last two jobless claims, it still stands, right? And this is, look, as you say, California already did. He's got an article out. You can read this one if you want. But super interesting. I did confirm this is actually happening. It's whether or not the market's going to react to that is what I'm going to be interested in. So, yeah, and a lot of it, I'm just trying to read some of my notes. It looks like it's just going to be a recounting, and it sounds like, and this is when we get the analysts talking about this, it sounds like a lot of that is going to be pulling out immigrants. So apparently they were counting immigrants in the monthly jobs report. So they're going to pull that back. But yeah, I mean, this is going to be a wild one if the market decides to react. But for me, I'm going to sit in the same camp more often, most of the time. What's the index for housing affordability? I'd have to pull this. It's what the hell is it called? It's just, I think, just the housing index, and I'm pulling it like you compare it to like the averages. We get housing numbers like every week, actually, but it's not really a market moving event. If I pull it, I'll pull it. More purchase. Anyways, we'll skip on that one. But so, anyways, that's where this lands us. I'm gonna bring this over. So Wednesday, again. Let's go to this week. So this is where we are. So we got this. This is funny. Leading index doesn't really do anything. Two speeches tomorrow, kind of like midday. And then Wednesday is when this really kind of kicks off. You get the oil status report, you get a 20-year bond auction, and you get FOMC minutes. And I believe this is when Jackson Hole actually starts. And then Thursday we get hit by another jobless claims number. Right now the consensus is at 230, so we'll see what this comes in at. So it's this one that we're looking at. Initial jobless claims, that's the one. And then we also so then Jackson Hole is definitely on. We'll probably get this BLS revision report. And then Friday, this is your kind of like keynote, right? And so that's going to lead us into a super choppy week. We'll see how this goes. But look, Thursday's jobless claims have absolutely been moving the market. FOMC minutes don't typically move, but it may pull back a lot of stuff. And then Friday we'll see, right? Interesting note. So like I'd pulled this seasonality calendar up, and I was watching something else. Sometimes the market tends to bottom, late July, August on these kind of like election year seasonality. Technically, this one says it would have been May, but we still have September ahead of us. Look, we're really close to the highs now. So at best case, I think the seasonality statistics say that we could do this like slow grind higher. And that's, I'm looking at the charts right now. Yeah, we are going, looks like we are trying to go a little bit higher. Yeah, looks like that's the case, right? So it's going to be dependent on tomorrow. I don't know that we get this big whoosh, but it might be something like that probably ends up getting bought up. And that's kind of like the question of, hey, do we continue to do you continue to grind higher, and really what does this next dip look like? So I think we haven't even gotten a real dip yet. I think that might be a tell. I was in the camp of like, whatever this next dip looks like, are they, how interested are they in buying it? That's probably going to be the tell. We haven't really even gotten a dip, right? Like it's just been absolutely insane. Dell red into green. Nice. Yeah, I was looking at that earlier. I almost reloaded that, but yeah, I have this that I was prepping for. This right here. So this is what we look like ahead of FOMC this week. And this may change, right? So we're sitting 5.25 to 5.5 right now. On the interest rate. So right now we're just about 80% probability for a 25 basis point rate cut. And just over, or it's just under 80%, just over 20% for a 50 basis point cut. Remember when we had that crazy sell off, we were like way up here for a 50 basis point rate cut. And this is for September. Remember, it's August now, so that'd be next month on the next meeting. That I think was a bit stretched. But it is what it is. That when that happened, the market was like, okay, you're probably offsides. So this one I'm looking at for January, and this is like, if you're going to forecast the full year, how many net rate cuts are they talking about? So 25, 50, we're right in between 75 and 100 basis point cuts by the end of the year. So that's what the market's pricing in. Whether or not that's aggressive, we'll see. So we have, September, November, and December, and then January. So we really have like possibly three meetings to go. I'm looking at this. Yeah, they're about the same. They're about the same for December. This is like essentially market saying, okay, 25 basis point rate cut for the next three meetings until the end of the year. That may or may not be true. The Fed has been on this stick right now where it's like they're really letting the market do a lot of the work for them, right? They haven't needed to do anything, and they've been right about that so far. And it's just letting the market kind of like decide. So I don't know if we get 100 basis points of cuts by the end of the year. That's what this is saying, but it might be a little stretchy. So we'll see. But anyways, I think this kind of brings us into earnings for the week. So again, we had so today after the close of Palo Alto, that might be a big one. They're up a lot. So a run up into earnings has been good for Palo Alto. I mean, it's actually been a really decent move off the lows. That's about like, what is that, 20% off the lows? Maybe more. Wow. I'm looking at this Palo Alto chart from Monday. Yeah, that's not to say that they ever needed, like, should have been, what is that, 280s. 22% off the lows for Palo Alto, heading into earnings tonight, sitting right literally at the highs. That'll be a tough one. I do think Palo Alto is going to benefit from a lot of the CrowdStrike stuff, but, we'll see, right? They still have the other issues. They're pretty much peak growth too, so they have to expand by acquisition. I think I just saw. Oh, I thought that I read that as Fortinet first. I was like, no. And then Home Depot did report before already. Lowe's is on deck next. I think HC. Let's take a look. HC actually had a quick sell-off and has completely rebounded since then. I actually think. So Lowe's versus Home Depot. Home Depot is more on the commercial side versus Home Depot Lowe's. Home Depot more on the commercial side. Lowe's very much on the residential side. I feel like Lowe's has just been a better performer overall, but I would still tend to take a Home Depot pairs trade. Maybe trade Home Depot over Lowe's and kind of avoid that type of like earnings volatility too. So interesting one. Also, Toll Brothers, that's a big home builder. And then Target. Yeah, we talked about Target. I think so. The retail stuff, if there's a recession, we would not see Target doing well. We would not see Macy's, and we would not see TJX doing well either. So this could be interesting one. TJX usually sells off, by the way, and then recovers after that. So we get retailers on deck this week, and then Snowflake. Honestly, I don't think Snowflake does anything. And if I own Snowflake and I saw a big pop on earnings, I'd probably sell it in the after hours. Sorry, guys. Zoom might be actually interesting. It's way in the depths of despair, actually bouncing now. Oh man, yeah. Zoom is like, that's all-time low. Is it? Yeah, all-time lows. $60, I think, was that first trade low on Zoom, and we are coming up on it now. So this one actually could bounce earnings like literally this week. You're right here looking to hopefully reclaim the 60, but man, I don't know. I don't think I need to chase this. If I was going to do this, it's just kind of like a more like binary possibility, but looks like they've been doing okay. Sell the news event on the last few. I'd have to look into this. It might be just a valuation thing. Toffee on Zoom. Synopsys, actually a great company. That one's been doing good. Kava. Yeah, you guys have been all on Kava and Workday. So that's what we have on deck right now. Nothing crazy. But I think it's really this retail situation, possibly Lowe's and then Toll Brothers for a read on the larger like housing play. Interesting enough to me, like home builders actually tend to lead a lot of the indices. So people always say semis lead, but you can look at home builders actually. To me, they actually move first. But yeah, so let me see. What do you guys have? Do you think they won't do rate cuts? No, I think they do a 25 basis point cut. And then it might be like, they might say like, oh, we're going to hold, right? We're going to cut, and then we're going to be data dependent. And then it's like every time we get to the next FOMC meeting, it's going to be like, are they going to cut? Are they going to cut? Are they going to cut? But they're probably going to, I feel like they're going to do a cut, and they're going to do like a hawkish cut, meaning like, we're going to go ahead and bring this down now. And then that's it. We're not going to plan for anything more and see how it goes. And the market may just be wanting to hear about, the full, like, we're going to cut 100 basis points by blah, 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 blah. But there's no way they're going to say that. Right. If not, then November also no, because so that's I don't think elections really play that big of a deal. I'm not in the camp of like, oh, I need to have a Trump basket and a Kamala and a Harris basket. I'm honestly, I'm not there right now. We're coming out of a Democratic regime. I think back in the day, you could have said, hey, look, hydrogen plays, your plug powers, your cannabis stocks, they would all just like rip and rally. But we've already been there, right? So we're coming out of that. The only one I feel confident about or comfortable with would be actually Tesla, right? Because Tesla, for Dems, technically EVs should do well because they're like, anyways. But that's the thing. It's like we're coming out of a like Democratic presidency. So I don't know. But at least Tesla's in Trump's camp at the same time. So it kind of hits on a little bit of both. But I do think it's mostly about the comps, like what are the companies going to be looking at forecasting again. So Tesla's going to be coming off really easy comps or light comps moving forward for the next year. Similar story with Apple. It's going to be coming off pretty easy comps for the next year. So I am comfortable with those right now. Let's see. Why doesn't it go back farther dates? I'm not sure, Austin, which one we're talking about. But anyways, Google with strength, but about to break. Oh, yeah. Futbucker is just trading super actively. We're in the background playing on his TV, man. But hey, let's do this. Let's go ahead, hop in. I got Cleo. Miss Cleo's waiting for us. Let's go take a look at what she has this week. It's a little interesting. Funny one. All right. So this is the reading. I got this Sunday night, and first thing I looked at, I was like, what the hell is this card? But this is the theme card. This is the 5 of Cups. I don't know what's in the background here. I'm not a tarot person, but these things, man, they just crack me up so much. It's ridiculous. But anyways, this is the 5 of Cups. This does not look... I've never seen this card before. It does not look like a good card, but it is what it is. Today's card, Monday, is the Fool. I've seen this one before. It's a foolish rally that doesn't necessarily stick. I think Miss Cleo's calling for a turnaround Tuesday. Whoa, look at this card. This is the 4 of Swords. I know the 7 of Swords, but there's the 7 of Swords cards that's like, oh, your nightmares, and it's like you're under a bunch of swords waking up in a pool of blood. This one's a straight up coffin, man. I don't know, and you're already in church. Like, that's brutal. So 4 of Swords, 5 of Swords, and then so what happens on the counter? 4 of Swords. So the Fool. This is a turnaround Tuesday, it looks like. 4, 5, a little bit more continuation. 2, I don't know what that is. 5, 2 of Wands. Maybe the battle's over. And then the Hierophant. I don't know what this one is. So anyways, let's read it. Let's see this stuff cracks me up, but it's crazy. She's been pretty dang accurate, guys. I got to give it to her, except for last week. Last week, she missed a little bit. So I will say, Jamie is like, yep, this is crazy, right? Like, you guys, oh man. Yeah. I don't know. Is it a full moon? Is it, what are we in retrograde? Something like that. But yeah, I drew 5 of avocados. I love it. Yeah, they didn't look good, but let's read them because I don't know what they say. So theme card is the 5 of Cups. Interesting to see because we had 4 of Cups last week. Clearly 4 to 5 suggests continuation. Okay. Also suggests spilled cups, lost profits. And that presents a bit of a conundrum. Yeah. We only have 1 week of historical data under this theme, and it was positive. So, okay, let's see. However, as a daily card, it skews bearish. So my estimate is that this card is continuation and bullish until proven otherwise. Should be quite obvious. So if mean reversion becomes a theme, we'll know pretty quickly. Yeah, I'm with that. We're going to have a big pivot, right? Either a continuation or just like we go. So Monday, this is acting strange for us as of late, but the way it's supposed to work is that we see a pretty solid rally that may become euphoric, but also sets up a good short. Not yet, still long. I expect dips to be bought and a possible late day flush. We had a midday pullback just a second ago, instantly bought up. That's what I'm talking about. These dips have been bought up so quickly. It's like, ooh, it's just the flippening. The flippening is happening. I wouldn't chase in the afternoon. Okay. If somehow this card flips, then you know what to do. Then short the rallies. Tuesday is the Four of Swords. This card sucks mostly because it implies a rest, and that rest leaves us vulnerable to weakness. I mean, vulnerable to weakness, sure. And this is coming right into a lot of data. So Wednesday FOMC minutes, Wednesday BLS revisions, Thursday jobs report, Friday like Powell speech at Jackson Hole. It's going to be a crazy one, right? Full super blue moon. I don't. Is that tonight? Oh yeah, maybe that's the. That means is that that mean? Does that mean it's a rotation? I think that means it's a start of a new something, a start of a new trend, possibly. This card sucks mostly. All right, price should float around a bit, and there's a high likelihood of a grind lower, perhaps a random flush that starts the process. I mean, Cleo's legit calling a turnaround Tuesday here. Even positive moves will likely be sold or muted. There's not much to do. So I think this was last. So I'll caution this. Last week she had a card like this, and it was just wrong. So take it for what it is. If she's just wrong, don't worry. But I don't know. People like this stuff because it gives you a little bit extra confidence. It's funny, but yeah, it is wild how accurate she can be sometimes. But when she's not, dump it, right? Wednesday, 5 of Swords, 4 to 5. Same suit implies continuation. Problem with that is that you can't continue to rest, right? So what she knows, or he, right, Cleo, knows this card almost always brings a mean reversion, which means the trap is being set on Monday or Tuesday. Does this mean Monday's rally sets a top on Tuesday? That's possible. She's guessing here, right? If Tuesday becomes a mover somehow, then fade that instead. Okay, so if Tuesday is a dumpster fire, then fade the shorts and go long on Wednesday. That's what this is saying. In other words, fade the prior day unless it's flat. If Tuesday's flat, then fade Monday's move instead. First of 4, is the red book going to shake it up? No, the red book doesn't really do anything. That's like retail stuff. First of 4 consecutive supermoons. What does that even mean? And I'm going to need to get you on one of these, and then you can tell us about the supermoon cycle. I don't know, man. What I do know is that whatever happens this week too, by the way, I mean, guys, don't forget, next week we have NVIDIA earnings. So this whole thing is probably going to be short-lived just in terms of like running up into NVIDIA earnings, which, by the way, could just be your easiest trade for the week is just NVIDIA. Because she's over 123. That's all I know. And you had a little bit of a stutter to step this morning. But everything it's hard. Everything looks like it's going up. We've come up so far and people are like cautious. And this is kind of the sentiment, right? Like we've come up so far from the lows that a lot of traders are going to be more cautious than not going long because we are so high now off the lows in such a short period of time. But then they might be inclined to go short, but the market's grinding higher. So they quickly cover their shorts. And we create this exact situation where VIX grinds back down to like 10. And the market grinds slowly back up to new highs because all net new shorts are coming in, quickly stopping. People are slowly getting long at the same time. It becomes this grind chop fest to the upside. It's wild. So anyways, that's neither here nor there. Thursday, 2 of 1. So 452 says we're moving back in the other direction, though with less energy than before. This sounds like Chop City. Ones are impulsive, which also means we'll see some wild swings throughout the day. I don't really care about your plan, Miss Cleo, but Jesus, play the chop, perhaps sell options in the opposite direction of Wednesday's move, expecting that they'll try and shake me out throughout the day. Tuesday, Thursday, Friday. So Tuesday, Thursday, Friday share similar we haven't read the Friday card. Similar energy with the theme card. So you should also look for patterns similar to Tuesday if they emerge and try to play it again. So I think tomorrow, Ms. Cleo is saying tomorrow is going to be a big deal read on momentum. Okay. Friday is the Hierophant. This guy prefers structure, stability to big battles and wild nights. This means more chop is on the menu. I don't know. Is that what structure and stability mean? What if structure and stability means like trend? I don't know. I might read this. If that's what that means, then I might read this different. Oh. When following a negative diet, positive 9 out of 10 times, but don't play too heavily without confirmation. Like I said, the theme shares energy with Tuesday, Thursday, Friday. Both Tuesday, Thursday could bring chop. If that happens, we'll see more chop here. That sounds like we might have one of those days where it's a crap day trade, or weeks where it's a crap day trading situation. And all the moves are made overnight. Is it a super moon? Super moon. Yeah. Sounds like Powell. I mean, so this is Powell's speech day, right? I don't know if Cleo's read on this as chop is good. If somebody looked this up, does the Hierophant prefer structure? Because if it preferred structure, that means trend day to me. So she could be wrong. Trend day in whatever direction, up or down. Honestly, it's likely going to be a trend day. There's not really a situation where I would read Friday's movement as anything other than trend day based on what we have on deck, right? So recap theme says mean reversion with continuation from last week, which was up. Tough to call, so we play daily cards. Lots of chop, stagnation with a midweek trap. Okay, so up, flat, down, up. That's my read. That's what she's saying. Up, down, flat. Let's go take a look at the indices. Powell sticks, peak moon, what? Tonight. And then Powell sticks to the party line, 25 basis points of data. Yeah, that's exactly, I'm right there. I'm 100% right there. 100%. All right, so here's my view. Every day when I come in, this is the first chart I look at. It looks exactly like this. 30-minute chart on SPY. Let's see. Where's my box? I'm missing my average week's range box. So I might need to turn this on. Really quick. So an average week's range, I just have it automated right now. Here. Secret sauce. You guys saw that just now. Huh. That's how fast. So an average week's range from the lows today. Yeah, that's auto calculated, by the way. 14 week average. Would actually bring us to new highs, 570s, 571. Would be wild. I believe it. This looks like we are going at least to 565 and filling the session gap. Almost like, how do we not? Yeah, like how do we not if we're moving over this? This is the moment, right? I'd say all of this. Let's go ahead and grab right there. So this is the moment, right? Like if we're right here, and this is why you'd be hesitant, right? Like you're sitting on it right now, and I'll drop it down. Literally this exact moment. Do we have any NFP levels here? Oh yeah. I mean, and we're over it. So we're over the highest NFP level. The only thing here, we didn't open over it. We opened on it. Look at this. This is Friday, 550 to 5. We knew that was happening. And then we opened and extended higher. So this 564.27 becomes your next target. It's well within an average week's range. That's true. We could be seeing all-time highs this week, guys. I'm just like, I'm looking at the charts. We could be seeing that, right? You can't really, you really cannot deny it. There's this very small trouble spot that I'd say we're looking at right now. And I'm going to zoom in to just identify a quick fair value up here. So I'm going to snag this 558 spot 70. We're going to call that fair value here. Did this. I believe this is already filled. Yeah. So this second lower fair value, we've already extended. And so we are at least going to 558 spot 70. That could happen. That could happen today before we close this stream out, actually. Really. All right. So you guys already dropping some tickers. Let's go ahead and run through this. I think IWM becomes, Qs look good. Qs look constructive. These guys have the biggest gap. They're not anything like the Qs right now. So like the biggest upside to me is actually on the Qs here, because we should be going into this 496 range if all things are equal, right? Like if we continue on and we see this strength from the Mag 7, they have the most catch up at the moment. IWM, or the easiest catch up at the moment. IWM, not quite as strong, but well on its way. I think, reclaiming its 20-day right now, coming back into this 220 level like that would be amazing. This is just, to me, this is going to be the big mover, and it's going to be kind of like event driven. So I would stay close to IWM. I have my leaps on here. They're slowly recovering, but looking good overall. I just know that this is definitively going to be an event-driven trade on IWM. So right before the actual event, I'll probably end up hedging this guy. And I haven't decided yet. So if you're in the server, or if you're on a MIT stream tomorrow, I'll probably figure out what I want to do there. But it might be closer to like 200s, maybe 210, something like that. But reclaiming its 20-day right now. Dixie, by the way, dollar index, this is continuing to bleed here. I am long gold all of a sudden, net new, for like this continuation, all-time high breakout. GLD here. Open pretty red here this morning, but again, we saw this. It's quick retest of support. This looks really, really constructive. Target for this week, 240s on GLD. So very possible there. I think that, again, this can be like a Powell type trade. VIX coming down, sitting at 15. I crude right into that level, 73.60. That's interesting here now to me. Bitcoin, I was looking over the weekend, possible flusher, but she held, right? So she held, and if it's holding, here's what happens, right? You get this very short term, what could end up looking like for the bulls like a bit of an inverse. They'll look at it like this, right? And I'm down with that. I think you can get this. My whole thing on crypto recently has been like, look, it's not I didn't buy this dip. I did buy this dip. I did not buy this dip. I thought it was like at risk. I still think it could be at risk, but it makes sense for Bitcoin to do this. So to me, that becomes more of like a short-term net long. Oddly enough, this is probably going to move also on Jackson Hole. And I did think that a lot of the yen carry trade was coming out of crypto. I actually got headlines that actually that is like they're loading that back up. So we'll see. But if we get another opportunity, regardless of what market I'm talking about, whether it's the stock market or the crypto market, net to me, I'm looking at the situation across the board as this is probably, if we get another dip, it's likely buy, right? It's likely buy time to me. whatever if we get a violent dip. All right. So let's go ahead. I know Futbucker was talking about Dell. Dell's interesting to me. We had this long off these lows. So Sutter step here, 1-2 inside day breakout day on the 12th, and a huge move off the lows. To me, dude, like this is a big 20% move in a handful of days. I like it, and it looks constructive, but I'm not necessarily ready to say, hey, look, it's going to explode to the upside. It's sitting at a very critical point. it makes sense for me to see this rest a little bit and possibly have a very tiny pullback to 106s. I love the stock, don't get me wrong. And that would actually make a lot of sense, just to have a little bit of a pullback, fill that stutter step, bounce right off the 200, and then we go. But until then, if it just continues like the rest of the market, I'm okay to see this go. What I want to see happen is I want to see this crack like this kind of order block right in here. These guys, right? I want to see this, 114-ish level get tested and hold, or make a new high slightly over 114, and then I'll buy the next pullback, if that makes sense. For now, I made a good amount of money on the first move. I'm okay to let this rest, and then I'll retake it if it ends up showing continuation moving forward. But it does look really this looks really constructive. We know Supermicro did well. This is just a question to me of whether or not the market rewards Dell for what it's doing, or if they get a sense of understanding. They might be too tied up with margin situation. So, but earnings at the end of the month, we had the pre-earnings run up. Maybe we get a little bit. It looks like we could get a little bit. That little bit upside could be to like 130s. This was that prior order block here on that last trade. But to see Dell get back into the 130s, I'd be so happy, man. I'd be so happy. I'd probably sell some. Is that blasphemy? I know. But off a $90 low, that's a good trade. All right. So then next one. So Justin's asked for Microsoft. We'll take a look at that one. So Microsoft has this range that it's been trading in for a very, very long time. And that is like, you buy Microsoft whenever it's under 400. And if you're not there, then now you should be there. So Microsoft's a very hard stock to short, but this is that kind of like 405 level. This is your supply right in here. And honestly, this was as close to that 380s that we got. This is supply. This is a hard supply. 1, 2, 3, all of this. It's just dip has been bought. You rarely get a massive pullback on Microsoft unless this is like market correction type territory. So this is 2021 from 350 down to 215. That's a huge drawdown. Most of the time you're looking stuff like this on Microsoft. So as long as it's holding really like this level right here, right now, 415, I believe it was 415. It was a big pivot level. Let's find it. 405s. Let me just pull out one more time frame. So all I'm doing right now is just kind of like on my 30-minute, finding out exactly where the pivots are, where the order blocks, 41690s, 41690 here, yeah, all of this. So this is 41750. 41750. If you're over 41750 on Microsoft, it's almost like, perfect right off the 20. This looks like a long. It's almost like Nvidia off 123, right? And if you don't know Nvidia, why does this thing never sync? Off 1, 2, 3. That this is like this crazy order block right in here. Massive orders. You get this little pivot, bounce, hold, boom, you're off. It's going to get sucked up right into it, fail here. Unless we get a daily close below 123, she's not a short. And this is continuing along upside. You just filled a session gap here. Yeah, I mean, it looks like you're well on its way. But again, another one where it's like it's come off from the lows so far. It's very hard to like get net new money. 37%? Seriously? Wow, that's a lot. When you look at it that way, it's like, 40% almost off the lows. That's crazy, man. That is crazy. But yeah, you're right into this overhead supply. So you just want to see really like this makes as long as it holds at 123, that's crucial. And then you're just making new daily higher lows from here. Do you think they won't do a rate cut? Yeah, no, I think they do that rate cut. Yeah, I think we talked about that. Scott wants GDXJ. So GLD, we looked at a little bit. I'm in for the all-time high breakout. The gold miners historically have not been that well received by the market recently compared to like gold, the underlying asset. But after Newmont had that a few quarters ago, they had the big change. I think we've been seeing a lot of that change. Even Barrick Gold recently revising, or recently doing well off their last earnings. I think this is good. I forgot. I'm in and out of these guys. GDXJ as an index. Yeah, I think this is good. This looks plenty good to me. Higher high, higher lows. Yeah, I think this is this real. I mean, this looks pretty bullish. I like this, Scott. I would go with this. I'll have to take some time to actually put together a legit trade on this because this actually looks really good. GDX looks like it's made a lot of this already. Similarly, but yeah, GDXJ is way in the dumper. So that, by the way, the difference, these are both ETFs. One is the like junior miners. One is the large gold miners. Google strength. Yeah. Okay. So Google, where's my Google? I have a different chart over here. So Google off the 200 here, kind of like creating a new little uptrend. Finally looking like it's going to fill this session gap. Finally, from Monday. This is like one of the very few that has not filled its session gap from Monday. This is all the way back from that Black Monday. It's finally there, sitting on its 20-day simple moving average. This is, this is pretty close to breakout mode. I'm going to close over this. This looks like a good trader for the week. If we can start closing over that 20-day simple moving average, you should have a swing into that 175s. So $10 on Google as a swing trader, medium term, that's actually pretty legit. All right, so scrolling through, NVIDIA sell the news or gap higher. I mean, it depends on where she lands. This is going, right? So at this point, it's kind of just like sell the news. You don't anticipate it, right? So stay long until it breaks structure. Like look at this green until it breaks structure, meaning like you have a lower high and a lower low, and then you trim your equity if you want, and then post earnings kind of look at what that structure looks like. I can't anticipate that one. I'm not going to trade this from earnings. Meta, what Bucker is me. Wait, you got me all messed up. Meta. So 531 is a big deal. I think this is probably one where you really could get interested. I always have the saying, there's no such thing as a triple top. We have 1, 2, 3 tops. So to me, what that means is the next shot that this takes at breaking, it should go through on Meta. So that's a 531.50 break. 1, 2, 3 tops. If I don't see it happening just yet, it's trying, but I think you could keep this one on your radar as like a heavy day trader. Even this little guy here holding 250 to 525. So I'd say 525 holds. It's going to take another shot at this 531, and it could be a really big break. It would likely breach this last high. So we were looking 540 pluses if that actually goes. That could be a really good trade. I absolutely keep this one on watch for right now. Absolutely. Let's take a look at that option chain, actually, though. That's really interesting. You got me spelling Meta like MEATA. Holy moly. Yeah, so 20,000 volume today on the 540s for this move. That's what I'm talking about, right? So that's that third time's the charm or fourth time's the charm. They looks like they are going Yeah, they're not buying time here. 103,000 calls to 58,000 puts. You got November 570s going out. You got, yeah, you got some weird like November 570s going out. You got some September 485 puts. I don't know if that's a hedge or what. That's the only stuff with time. But November 570, I mean, that's a lot. But that's probably going to sit at like a pretty solid measured move here. November, about 2 months, 3 months out. Yeah, 1,141 volume. That's a standout strike today. Those are sitting at about 2,300 per contract for 88 days to expiration, November 570s. My gut is that that's going to be pretty much exactly this kind of measured move. Yeah, 578. So that would be your real target into this area for this break trend. But I would say that's not gonna happen in a single session. Unlikely. $2,500 or $2,300 is a lot to pay for an like near 3-month contract. In that case, you'd really need to see it do a whole lot more than that. You'd need to see it closer to 6 for that to work out, which would be in the cards, quite frankly. So they might be targeting 600. If they're going to pay up $2,300 for a $570 contract, you better be targeting like 600. And that actually is in the cards too. So I could see that. Actually, I could definitely see that. That's a good setup. I like that setup a lot. Yeah, 3M, we've been long. This thing has been consolidating like crazy. Not out of the woods yet. Looking better, a little bit more constructive. 128.68 is going to be the actual break. They did declare a dividend today. This is high and tight, man. High and tight. So 58, we are off to the races. This just looks good to me. We do have a dividend coming at the end of the month. So hopefully, it just looks good to me, but the momentum has been really slow. So I'm actually, I really would like to trim this position down. I haven't taken a single trim on this, and it's just been kind of like sucking up premium. This is a really long consolidation after a power earnings gap. This is near 1 month. I've been sitting in about like since right here. So cons are burning for me. I need this guy to get up and go ASAP. Paper look at FedEx. Yeah, we can take a look at FedEx. Somebody asked me about UPS earlier today. What I'd say is like IYT is the transport sector. We do want to take a look at that first. That's where UPS, FedEx, even Uber sit. This actually looks constructive. FedEx would be your best performer in there. 300 we know is going to be that big deal level. 288. So I don't see how this doesn't make another run to 3. Quite frankly, that's going to be right in here. I would target that. Definitely. Yeah, off the 50 into the 20. I think the 20 breaks. I think you get into 3. So when is the question? How do you trade it? Those are more important things. Not a lot of volume today. 4,400 calls, 2,100 puts. Most of it centering on, someone's going kind of aggressive. Someone's going, it's just not a lot of volume right now. It looks like you got some YOLOs sitting at like December 350s, October 320s. They're actually going for a little bit higher in that for all-time highs. It's possible. But yeah, it's not busy enough for me to get excited on this near term. Not a ton of volume. Near term, some pot shots, basically. Quick and dirties that I see going out. Nothing crazy. When do they report next? 330s. Nah. These are wild. I don't know if I would follow any of this stuff. September 19th is the next earnings report. Yeah, so it looks like most people are taking trades past earnings. Maybe that's buy September 320, sell some, buy some October, November, sell some Septembers. like calendar spreads. All right, couple requests on AMD, and then we'll call it here pretty soon. AMD, ooh, right into a huge level. Let me see. This is I got to clean this chart up. I got so many things going on here. It looks okay at a glance, but right into a lot of overhead supply. This kind of looks toppy, man. I will say that. I think you wait on AMD. So you got the 20 cross. I've said this the whole time too, though, right? Like, why would you want to be long AMD when NVIDIA is reporting? They just bought somebody also. So I think it's kind of like, is the market going to reward them for that purchase? At this point, I feel like, from the 140 to 150 and change, your target here is acquired. This is a massive break area here. This is exactly where it broke down last time. I think it's another wait, rest. 150, 350. You got to rest. It's not a short. Might be a little bit of a pullback. I'm going to call what is this? Yeah, 150, 60, like kind of like your next price of interest. You really want this to hold. If that doesn't hold, then you are probably going to retest this 145. It's AMD though. These semis can make these like moves round trip, like in a single session. Like all of a sudden you're like, boom, boom. If you see 140s again holding at any point, you're likely that's it. So it may be a little bit of pullback. This looks constructive. I'm more interested to see how the market digests this purchase on AMD. But this looks like a no trade for me on this one. Like I'm not, it's too close to these SMAs. It could get really choppy. So I'm going to sit that one out. Potential, another decent dip thesis. Cash would be suggested to keep on the side in general. Cash is suggested. And even if we don't need it, like there are other things that like would be actually good, still at these levels. So, yeah. Loading back yen trade. Yeah. So you didn't catch us? Yeah, they're loading back to the yen trade. I said I put the trade right back on once the BOJ. Yeah, that's basically what was going on. So does the IWM go figure? Dovish absolutely can't get pumping again. I think you guys might be a little short-sighted on this IWM. I'm not thinking near term. I'm thinking like, from a weekly perspective, still like up in here, but that takes a long time. Look, net higher high. This is technically a higher low, or at least an equal low here. Very close to you. And it was right off that 200 week simple moving average also. And the 200 day. So I think this is the lows for now. But I'm not in anything short. I'm in leaps, man. I'm not anything short dated. So this was a good move to the 230s, but it wasn't the move. It wasn't the net like big move that I was looking for. And that big move, honestly, that's going to be, 6 months plus to play out at least. So it could get choppy. I think this is a pivotal moment that we're going to get into. What I'd say here is, let's be real. There's 2 points that we're coming up to on IWM right here, 215 This is basically the gap, breakdown gap. We have a session gap here. So I think this is a no-brainer to get here. Sorry, my mouse is kind of giving me a hard time here. I think this is a no-brainer to get 216.23. And then it's about like what happens next, right? So in this area, this is going to be overhead supplies 218. At this point, I just want to see higher lows. We do have a breakdown here, 223, so a fair value, and a little bit of overhead supply. So like if she can blow through all of this, it's all good. But this section right now, up in here, 221, it's going to be interesting to see what the reaction is. And I'm going to, one more time, kind of pull this back over here on this daily from IWM way back when. This is really what we're testing, right? We're testing this kind of like 221 areas. That was like major pivot. If she gets going, 240s ideally, but it's got to get through really this 221 area right in here. So if it can get through, to me, if it can get through right here, 223s, I think this is a foregone conclusion that this happens. Then I want to see it holding 217. Then I want to see it really breaking through. And pullbacks are fine as long as they're locking in, equal or higher lows. IWM is a tough one, right? It's a super tough one. But to me, this looks so far like big fat breakout, pullback, retest. These buyers held the line right here. So it doesn't look like a big change in thesis at all. Just like a, too far, too fast kind of scenario. So that said, still, if we get up here, I definitely want to be trimming into strength, but not yet. Nike. Yeah, I have Nike calls currently. I think, so from this gap down, this is more like Nike, and a lot of these others we're coming into this activist season. So Nike from this high to here, I saw it as like, okay, possibly 80, just under 86, right into here. Here. But again, big move off the lows. It can breathe a little bit. So I wouldn't be adding to this right now. I would just be sitting on runners, which I am sitting on runners. I would just be hanging out. I don't know. This could take a while to like breathe. So you don't want to give it too much time, but I would wait on this through. I would not add on this unless I saw like big dips to like 78s. And depending on your size, like I would be out the majority here and just kind of like trail it out. Make sure that like every day you're holding over 82. And then the worst case, this dips to 80, but below 80, it's going to probably pull back a good chunk of this. And I wouldn't want to be in here at that point. So I would just call these two bottoms like your 80, spot 70 right here, like your absolute maximum drawdown on anything short term. 80, just under 81 right here. So like it could chop like this. But that's the most even a September would be able to withstand. Anything more than that is going to get ugly. Wait till I bottomed 290. Yeah, for sure. You did. We did AMD, MU. Okay, MU and Hood. We got a couple others. Right. MU, I actually bought off the 90s. I didn't really realize that it had gone so far so fast. A lot of movement up here. I think this one was like, look, at the end of the day, this company sold out for the next year, right? So it's like, okay, well, that is what it is. It's more of like, well, what's the upside? And I think there's definitely upside, but it's like probably didn't need to be that far below. At this point, we are really kind of like holding here, right? So this low today, maximum I'd want to see from a pullback perspective on Micron is 102, right? Maximum. Depending on your time horizon and what you're trading, that may break a trade or it may not, right? Like most of this, I'm going to be referring to like equity stuff. So it's possible that it pulls back here and holds this 102 and is still valid and continues on. I would say 120s here is that target upside right in here. And that's going to be about half back right there. 122.50 I like as an upside target. Still a lot to go. But again, this could take a little bit. I do like this setup as long as it can hold in here. And that kind of looks a little bit more like that. So that would be ideal. Holding here, I think, this week makes sense. This is another one where like AMD earnings or NVIDIA earnings, this is probably going to run up into it. All right, Hood. Robinhood. So we got the July data out. It had a move. It's not holding. It's over 20. You got over 20. And it's right into this kind of like order block here. So I think that this could get one more little retest. We're going to take it right here. And there's a very little teeny tiny blip. So this is 1970 down to 1950. So Hood kind of dips. I'm looking at this area. 1950, we know, is an important level for sure. But 1970 is where it had held over just before and the buyers really stepped in. So below 1950 is not happening. That's what this means. Cannot get below 1950. So, but that means inside that little box, we could see a little bit more accumulation to 1950, but I don't want to see anything lower than that. Lower than that, and we're not doing it. This is constructive, right? 2019, look, from the lows, this has made another big run. Over 20, call it 50 here. We are going. And we're very constructive. Over $20 and is that 25 cents? Yeah. We get some daily closes over. So, I mean, it's a little bit of a rest. 1, 2 or 3 days rest. We'll see how this goes. I think the market's at a pretty critical pivot point. This can chop a little bit. We'll see. Being runner short dated. If you're long, that's fine. Long dated, I think that's fine. What we want to see is that $20.25 level really clear, hold, and just continue on. Then we go straight to 22.50. But level to level, I don't want to get too far ahead of my skis. Tesla. And then I do see PayPal. But let's do Tesla because I think that's an important one here. So Tesla, we have, let's get, it's a cleaner chart. So clean chart meaning that like I don't have to do a whole lot here. So Tesla, this is the 30-minute view. Short dated downtrend. We're actually over it today. Long dated downtrend. So what I meant by that was short dated. That's just this little one. Long dated. We're still right there. So the last time when we were talking about this Tesla trade, this defended, retest right here. I didn't want to see this get into that liquidity zone. I didn't think it was going to hold if we did go lower, but she stopped right there on the dime. And, couple 1, 2, 3, 4, 5. How many days of consolidation? 1, 2, 3, 4, 5 days. So this is an example. This is 5 days after that low. She starts to go. It's not out of the woods right? So you're technically still underneath this broader downtrend, and you're right into it on the short time frame. So the next couple days, this is actually going to be really important. If Tesla can get over, it's 230, right? Like I think this goes to 230. And here, what I just did, I turned on some of these simple moving averages. The 20 and the 50 are down here. We're over this last consolidation area here, right? As long as we can really hold this general trend, I mean, over 220, this looks good. I don't think 220 is the actual number, though. I think it's something else. 222. I feel like 222. Do you guys remember? Was it 222 as like a big deal number? $233 looks like it would be the target. And then this 217. Yeah, I mean, I had 216. To me, as long as it was over 216, we were going to 230. And that's essentially this kind of gap. I'm just trying to refine this level a little bit more. Yeah, I think it was 216. To go back, 216 here, breakdown, 210. Here. Okay, I think I found it. 217.30. Stutter, step. Yep. This looks a little bit better. 217. Let's call it between 217 and 216. If it can hold that area, I think this looks good, right? And that's really just this yesterday, Friday's kind of pivot highs and Thursday highs. So these were big deal levels to me, right in that area. She can pull back a little bit, but she doesn't need to. It's Tesla. Like this morning may just be all you're going to get right there. So it's very possible that that's it. Super short term. Just want to use that prior day's high. Whatever that is right here. 219s. But honestly, it's possible that it pulls back a little bit more than that. But this was the first trim spot. If you're long from the lows down here in the 200s, or like low 200s, then you're definitely at a trim spot. Like you definitely want to take like measures, protect some of those gains. And hopefully she runs, but you don't want to lose money on this one. She's been doing good. So what do I think about PayPal? I think PayPal is just a value trap, man. I don't like PayPal. I hate PayPal. The chart, yeah, looks good, but it's like, why would I buy PayPal? I mean, they're buying back shares, I believe. But I don't have like a growth story here. And I honestly do not have enough value traps in my portfolio, to be fair. I don't want to add another one. I mean, it's kind of like the payment processors as a whole are tough. I just don't think this stock has enough of an edge to be really interesting as a payment. I think she gets to 73, right, and a quarter and fills this gap. But I don't have a storyline on PayPal that could get me ultra bullish on this just yet. Weekly looks good. This is one where I would be more comfortable buying it over 73 than down here because then the chart's like, okay, we're a little bit better. But it's not super consistent yet. This could be a while till you're out of the woods on this one. Yeah, 73.25. That's your massive pivot on PayPal's daily chart. Or I would do set an alert, 73.25. Best Buy at Best Buy at the money. I'm not sure what that means. PSA. Look at PSA. That's Public Storage. Yeah, I actually have seen this one. That's doing really well. All right, we're coming into time, guys. You know what? Ping me wherever. I think we're good. I'll be with Amit later on. There are a handful of other ones. There was one question on CMG. I think this one's a tough one. So I was long. I'm long equity. And I was long options December calls. That was before the CEO left. I think it's a tough spot, right? This one's weak-ish. I think it's good from an equity perspective. It's holding just barely. I closed it this morning because I'm not so sure how the market's going to treat this without that CEO. I'm not deterred personally, but the market might be. And unless this is really back over its 20-day SMA, I don't need to be in it because it's at risk here of falling out. And that would not really be fun. I like the equity, but that's because I don't need the momentum to do okay, and I'll be okay if this goes down a little bit more. On equity, I could pick it up, but right now we are just definitively getting into this consolidation area. So it's in a rest mode. It's not going up just yet, at least not until it's back over 54s. So if it's over 54, 55, we're going up, but this could be in a digestion mode of what the market decides is worth without that CEO. So, all right, guys, what am I most bullish on short term? What am I most bullish on short term? I still like Dell. A lot into earnings. I still like Dell a lot. I think this is a good discount. It's run a bit, but I still like it a lot. And I like my NYCV. I haven't looked at today. Yeah, I like my NYCV. This is like the KRE trade. So inside of IWM, if I mean, this is not short term. You asked short term. Nvidia would be short term. That makes sense to me. Playing candle by candle. That makes sense. And then Dell. Best stock. I love it. Yes. But we'll see. A couple of people talking about Upstart. This one could be one where it just rips, right? So short term, I own this. I think this is worth a flyer. It's like we're at just one of those points, man, where this market is at a pivot. Things can absolutely explode, but I don't want to be over leveraged, if that makes sense. So I'm still most bullish on the small caps short term. These are like the lenders. Upstart is like technically lender. Like the lenders go to them and kind of like for their AI piece of it, like who's the best person, what can I loan these to? This is a big break on Upstart. This could just be nasty. Really nasty breakout on Upstart for the IWM trade. This could be wild. So the stock alone on Upstart is basically like owning a call option, though. So I'll just tell you that this could be a wild breakout, and I mean wild breakout. You don't need a whole lot. That would be one where like if the rate situation stays, these guys are going to have probably the most beta in general. Crazy. Yeah. And I do like, yeah, we'll fly with rate cuts. Yeah, so these are the things I'm most bullish on near term. This is all the IWM stuff. And I'm already here. I think that the good companies still catch a bid, like they're do well. I think there's some very depressed situations here in the market that are mostly in those small cap lenders. Didn't look at SoFi, but SoFi could be one of them. It just whoa. 740. Yeah, like this is like it's possibly Noto's time, right? This chart looks constructive. So when I say lenders, the people that are going to benefit from like refinancing, things like that, holy SoFi, rocket companies, yeah, like these are lenders. So this type of stuff I think is really good, but it's more like at the end of the day, you don't want to forget about your Mag 7. You don't want to forget about your Dells, your Microns, your Amazons. I think you build into Amazon for sure. This is not going to stay here. Eventually, this is going to break through. This was a discount that's coming to an end. So this sale is probably closer to being over than it was before. So I would, yeah, this is, sorry. Not necessarily long term, but yeah, we'll see. The short term, sorry, not necessarily short term. Amazon, interesting here. I like this. But all right, guys, I'm gonna call it. I do still like Rivian. I still have it. I mean, I guess you could add to it if you wanted to around that 13. I think this is it. I think this is where it bases out on Rivian right here. But look, I'm not adding. I have enough, man. I have enough. I think we're good. I don't think she goes much lower than this right here. Should be all she wrote. So, oh, look at that. Should be all she wrote right there. Look, if they can't push this lower, where's it got to go? It's got to go higher. I think you see 16 pretty soon. All right. Anyways, that's it for me, guys. I appreciate all of you, and I will catch you on the next one. Adios. Oh, and I will be on. So we'll be on with the Mitt probably tomorrow. I think we'll be on with Wolfie tonight for what is it? For some of the like stock picker space, and yeah, then I'll be in and out of spaces. Cool. All right, guys. See you later. Have a good week.